Russia and the emerging market landscape is Stephen Jennings. He's the Chief Executive Officer of Renaissance Capital and a semi-regular guest on the Global Exchange. Good to see you here in Davos. I'd like to start on Russia because we've been focusing in on the major emerging economies like China, India, and again Russia. Do you find that it's being held back because of the Eurozone crisis right now? It's batting below its weight or punching below its weight as a result?
It's certainly affecting capital flows, and it's certainly affecting the outlook. You know, after 2008, I don't think we need any reminding that we're living in an incredibly interconnected world, and Russia is very exposed to any significant downturn in commodity prices. So it's affecting the outlook, and it's affecting confidence.
Well, it's interesting because commodity prices are holding up very well. We had that surprise shock in December. Nobody really saw the protests, coming up. And then you have, juxtaposed against that, John Chambers telling us on television, Russia's an easy place to do business. He's gone into Skolkovo, for example, the high-tech hub. How do we balance out the two different Russias that we see today?
There's tremendous business building opportunity. It's a big market, but it's a very undeveloped market. A lot of sectors haven't been built out. Efficiency levels are very low, but it's also a very volatile economy. History tells us that.
And that's not going to change, is what you're saying here, Tim, even though he being Mr. Putin's trying to diversify away from just the oil and gas and the minerals.
Again, we saw in 2008, 2009, very few economies were worse affected than Russia. So over the cycle, fantastic business building opportunities, but still a very volatile economy.
Yeah, in fact, I want to talk to you about the overall outlook you're taking to emerging markets today. And the reason I'm bringing it up, on Global Exchange, we've been tracking this idea that we saw a rally in mid-December to mid-January in the range of the markets between 7 to 10, 12%. Was that marking the bottom of the emerging market sell-off? And you're a buyer now going into different markets, even Russia with the corruption challenges?
We're so dependent on what happens in Europe. So if we have an extreme event in Europe, which one can't rule out, it's going to have a big impact on emerging markets. As that probability diminishes, I think the chance of a big rally is quite significant, because that extreme scenario got priced in, particularly in Russia, to a very significant degree towards the end of last year.
Yeah, in fact, the sell-off in the second half. Give us your 2 or 3 best picks for country emerging markets that you think can buffer itself from the downturn in 2012 if that comes. Well, if I don't fall over the railing here.
I'm slightly contradicting myself, but in a normal scenario, and we've seen this many times before, I have every expectation Russia will be one of the very strongest performing markets in the world. Huh. It's extremely cheap. A lot of investors are underweight. There's a lot of cash on the sidelines. 9 out of 10 times Russia is one of the 3 best or 3 worst markets in the world. So it could be a great year for Russia if we have stability in Europe. From a more medium-term perspective, we love the growth and we love the valuations in sub-Saharan Africa.
Yeah, I've been watching. They're looking at 4.5 to 5% growth for the rest of the decade. Come on over to the board very quickly if you can here. This is our theme of 2012. Do the emerging markets decouple? And I think it really kind of depends on where you're based. Shackled because you're linked too much to the Eurozone in the United States, or are they breaking free at least, or have they broken free and have grown more independently of the developed world or not?
Well, very uncharacteristically, I'm going to kick for touch. I'm right down the middle because it's just so dependent on the nature of the downturn.
I got to create a new space for you here above the median.
Mr. Conservative today.
Mr. Conservative. This is Robert Zoellick, by the way. He says it really kind of depends where you are. If you're close to the Eurozone, you're on the left, like Central and Eastern Europe. That's why they're putting the funds in. Closer to the right, you're like Latin America and even China, which continues to grow. Makes sense.
Where he's wrong is Africa, because we know in 2009, sub-Saharan Africa was the most resilient region in the world. So he's definitely wrong there.
Okay, good to see you. Yeah, thanks for the candid talk. Stephen Jennings, once again, of Renaissance Capital.